What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ABNB for Airbnb, of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, they gave us an earnings announcement after the bell today, so let's flip on the extended hour session and see what's going on with the number. Would you look at that? A nice pop to the upside here inside of Airbnb. I would assume that we produce some sort of gap up for tomorrow's session, but please keep in mind a lot can happen between now and 9:30 when the bell actually rings, so adjust these levels accordingly. We want to know where the overnight high is. Oops, we want to switch tools as well before we try that. So let's zoom back in and try that one more time here. The overnight high is what we want. We want the anticipated opening price, and while we're at it, we may as well grab today's high of day. We're going to turn that back off. There we go. And now we want to look at the daily time frame chart here to talk about potential scenarios. Now, whenever we're dealing with a gap, could be up or down. Scenario number one is always the gap and trap. And what that looks like is opening here, failing to take out the overnight high, trading lower, back down through the open for a short to fill the gap to today's high of day, which is 180.36. Now, given the fact that this range here is about roughly 1 to 1, that's a reasonable trade to take. As long as you can get your stop loss to break even as quick as possible and then have a risk-friendly trade on your hands, fine, that's a reasonable setup to take. In an ideal world, it would do something like this, never even get close to the overnight high. We put our stop here. Boom, there's your target. Now you're looking at something that's much closer to a 2 to 1, 3 to 1, maybe even 4 to 1, depending on how tight that high ultimately ends up being. You get the gist, right? That's how this trade becomes more and more attractive as the high of day becomes lower, closer to the open, or if the open is closer to the overnight high, right? It goes both ways. Let's quickly take a look at the trade tab and just ensure that this is shortable. Yes, it is based on the shares. And if we come into the put side of things on the contracts over here, not fantastic volume. I would have to say that, right? So in here, not a whole lot. At these at the money strikes, even the spread in here is not really looking that great. If you start going out of the money, there's some decent volume that went through here on the 175s, but even still, a 30-cent spread, I don't know, it doesn't seem too friendly to me. So I would probably opt for short shares, considering it is easy to borrow for day trades and that setup there. The other scenario that I'm sure a lot more people are thinking about, scenario number two, is the gap and go. Now, what does that look like? Let me put this back on auto here. Scrunch it up. And here we go. If we open here, put in bull flag consolidation, ascending triangle, anything that basically sets up the break of the overnight high, 195, you're looking left for the next daily area of resistance, which is way up here, closer to 210. Now, I would imagine that there's potential for 200, the psychological area, to act as resistance first. So I'm going to put that on the charts just so we have it. It may or may not act as resistance. Notice that we chopped through it in the past without really giving much of thought to it. But, who knows? On a gap up, being a little extended to the upside, maybe we resist at the psychological 200, just a level I would encourage you to have on your charts as well. That's really going to wrap up the video. We have both scenarios mapped out with the levels. If you enjoyed it or learned anything new today, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.